No, good afternoon, everyone, and thank you so much for being here. I'm sure we'll try to keep you engaged after a heavy lunch session. If you just come back from lunch, uh, my name is Jaspreet Singh, and I think we'll kind of go again round to know a little more about our panelists and the work they have been doing. As the session MC said that we're going to talk today about the gig economy and the financial innovation in the space of gig economy. We have seen how this entire sector has been a big job creator for last few years, especially with the advent of digital technologies and platform players, with some very unique characteristics, where migration, income variability, lack of social protection still very much persist in the entire space. I think the whole idea would be to unpack, what's really happening in the sector when it comes to uh, serving the needs of these people from a financial service perspective. We have an esteemed panel over here, who bring a lot of different perspective to this conversation, both on the practitioner side, but also from a development and policy side broadly. So we'll go in rounds, but we'll keep it as much as flexible to discuss among ourselves to understand what can be some of the underlying issues which we are yet not kind of covering in the financial innovation space. So I'll start on the uh, from my left with Leena possibly, and give the floor to you, Leena, to one, tell us a little more about CGAP, the work that CGAP has been doing, and help us understand, the entire landscape of gig economy and the financial services space, where you and CGAP have been working on. What have been some of the early learnings and lessons about what's working, what's not working, and then we'll kind of move to the practitioners' context in terms of how they see it from their lens of from execution perspective. Over to you.
Thank you, Jaspreet, and thank you all for being here. Um, our work at CGAP around financial services for gig workers kind of started with the hypothesis that platform gig workers in particular are an interesting segment to serve with unique opportunities, given that they are, sorry? Oh. Given that they are securing their jobs online and earning digitally and are somewhat comfortable and digitally savvy and have experience with digital financial services. So we set out to kind of test some of these hypotheses, and to play around with some of the innovations around serving them with kind of more meaningful financial services. We know that and our focus at CGAP is kind of low income. So our work focused around blue collar platform gig workers, staying away from the white collar that is probably better served. And I think we found one of our hypotheses around leveraging the digital trails that are being generated by virtue of these workers being on platforms and generating a lot of data that is visible to the platforms and in partnership with financial service providers to the financial service providers. So one of the things that we tested in partnership with KarmaLife actually was leveraging alternative data to bring new to credit blue collar gig workers into the fold of formal financial services. We looked at data such as earnings, on the platform, work on the platform, time on, tenure on the platform, regularity of them being on the platform. And we found that all of these alternative sources of data were a useful proxy in developing a credit score to bring them into the fold, and doing so without compromising or kind of compromising the quality of those loans. That is no difference or no significant difference in NPAs or defaults. We also played around with automatically sweeping from earnings, from digital earnings on the platform into loan repayments, into insurance premiums and savings, to kind of remove the friction around carrying out these transactions. We know from all of our research that, most low-income workers save. They also always have a willingness to repay. When they don't repay digital loans, it's usually not because of lack of wanting to repay. So, kind of making it more convenient, seamless by automatic sweeps. In the case of loan repayments, it was obviously a fixed amount, but in the case of savings, it was a percentage of earnings, that was usually predetermined by the user themselves. So, they had the flexibility to choose how much they wanted to save of their earnings. And the last thing I'll touch upon now before handing over is kind of our experimenting in bundling financial and non-financial services. To gig workers in Kenya with Jumia, we played with bundling insurance with telemedicine. In South Africa with Abelobi, a fishing platform, we bundled financial literacy with savings, and it had impacts on uptake of savings. So I'll stop there for now.
No, thank you so much. I think I'll come back to you maybe later in this conversation, because it will be good to understand from your learning experiment, how many of these models were actually able to scale and make that change. Okay, because oftentimes, we get into this habit of doing a lot of pilots, good ideas, but then, where are the sweet spot of scale really lying around? And possibly we'll look at the financial security angle from a different lens in the conversation. But going to Badal from here on, and because, you had one of your learning partners as KarmaLife, one, it will be great to understand, Badal, more about the KarmaLife own work around gig economy space, especially the EWA product that you have been rolling out. Where do you see that need gap really existing, which is being served through a EWA kind of product? Okay, and maybe I'll add to the point, picking up from Leena's point, that the risk assessment for a gig worker, right? In your opinion, how different is that compared to a traditional, income worker, basically, right? So, floor is yours.
Hello, can you hear me? Okay, thank you, Jaspreet. Just a little bit about KarmaLife. We empower gig and blue-collar workers in India with an unmet need to have small-ticket, short-cycle, earnings-linked loans or finance. This allows them to it allows them to address cash flow volatility, which they suffer. It allows them to grow their earnings and become more resilient. And I'll share some data points on that. We do this through employers. So we work with digital gig platforms and employers and embed our product in a way that it's easier for their workers to access our solutions. And then for the employer/gig platforms, this allows them to offer a valuable financial benefit to their workers and also reap some of the benefits, the business benefits in terms of greater engagement, productivity, retention, etc. from their workforce. But coming to the question, Jaspreet, I'm glad you asked it, because all of us digital lenders, or fintechs who are in the digital lending value stream, are currently facing a lot of regulatory scrutiny, and so I think it's very important to understand what these different products are and evaluate them from the standpoint of design and impact. So our core liquidity products, there are two kinds. We have something called earned wage access, which is a relatively new product. It is like a salary advance, and I'll talk more about it. And then we also have a personal loan, which is a traditional multi-period installment linked product. In fact, that is the product that we collaborated with CGAP to germinate. And I mean, in terms of the proof point, I mean, it's now 30% of our overall portfolio. So, so it has scaled and scaled nicely. But I want to talk more about earned wage access because, I mean, it's a lesser known product and I think it's highly relevant for our demographic. So liquidity is a universal need. Everybody needs it, right? That's not the issue. The issue is eligibility. How do you make gig workers who are, they're non-salaried, they're high churn workers, how do you make them, how do you underwrite them, how do you make them eligible? So we do it on the basis of near real-time periodic work data. And whether for both products we do that, right? So we use work information, work data. We found it much more relevant as well as much more inclusive than, say, a credit score-based underwriting model. For EWA in particular, I mean, it is secured by accrued earnings, so there is less risk there, right? So let's say somebody is getting paid at the beginning of next month for the previous month's work. We can, based on the data that we receive, say on the middle of the month, 15th of the month, we can give them a credit line that enables them to access any portion of the accrued earnings that they have accrued till there. And either we get earnings data or some proxy thereof. So that's the basic model. And because of that, you can imagine, it is, I mean, there's no really, everybody is eligible for it, right? So, I mean, if you earn less from a platform, you get less credit. If you earn more from a platform, you get more credit, but you get some portion of your income or earnings. This is pretty impactful because it allows users to access funds when they need it, right? Because there are all sorts of shocks and bills and so on and so forth that need to be paid, particularly when you're a hand-to-mouth, worker. Second, it allows them to grow their credit scores through repeated usage cycles, right? So in a way, it is a starting point to become more aware, prepare, as well as grow your credit score for more sophisticated financial products, which is also a very important point because a lot of these folks are new to credit. Yeah, I should stop there and maybe...
No, but I would maybe, like to have a follow-up with you on this because you've been working with a lot of platform players, breaking this data silos within the platforms as well, to get access to this information. Right, how challenging or difficult is that piece when you get into those arrangements? Okay, because that kind of also allows you to improve your either risk assessment of the individual you're lending to, right, versus not getting access to that information or data. How is that? How that plays into?
Yeah, so we've been at this now for about four and a half, actually, almost 5 years. But in the beginning, yes, I mean, this was a completely new business model. Right, I mean, the use of work data was not being done at all before. We were a pioneer in doing that. And, we learned our way through. We learned through a very messy process, but, I mean, we learned our way through. And on the data side, I think we've harmonized that structure, the data, structure, the templates that we need. They vary by segment and sector. So for mobility platforms versus delivery platforms versus kind of home services or micro professionals, it can be fairly different. We basically have, you just have to be adept at that and learn your way through. But of course, there has to be a very solid partnership between us as the solution provider and the platform, right? So we have entered into, there's been quite a bit of hit and trial, particularly in the earlier days, where you work with a platform, and unless the platform is genuinely interested in building this, co-creating this model to serve their workers, there are lots of things that can go wrong, right? And so, because there's also a lot of operational hygiene that comes into the play. I mean, you can have API-based integrations, but I mean, at the end of the day, garbage in, garbage out. So, I mean, unless you have the right data, you have that operational hygiene. There is, solid SLAs to drive a proper user journey. it can get hampered. So we've learned the hard way, but I mean, when you start anything, it's the only way to do it. So
That is true.
yeah.
No, thank you so much for that. And thank you for innovating in the space, actually. That is more important because that's what keeps the engine of the system going, ecosystem going. But coming over to you, Anand, PayNearby is a key bridge in the Indian ecosystem, connecting the financial institutions to the last mile. Okay, because access is the first fundamental thing, and then everything else follows post that, right? And you have grown leaps and bounds. So one will love to know a little more about PayNearby's own journey of how you've kind of come around. And secondly, it will be great to understand within the context of gig economy, right? How do you see BCs playing that role of again rebridging that last mile connect? Okay, where you might be already using them in your current business context, but also serving or working in partnership beyond the banks with the platforms and other players, okay, and enabling some of these things as you go on. So please.
Yeah, thank you. Basically nearby technologies, the whole idea is to bring everything nearer to people than they are. And PayNearby is the first initiative, Buy Nearby, Insure Nearby, and so on. Loan Nearby. The whole idea is that there are only 105,000 and some change branches of banks. And they're at least 40 kilometers away from an individual. Likewise, the insurers are 60 kilometers away. The mutual fund sellers are about really away from the reality. 400 kilometers away from a per capita if you see the resellers or insurance. So our core is to take most of the services to most of the people at most of the places. Now this, if you see, is possible when you componentize everything, granularize, sachetize, digitize, and universalize. I was telling you in the break that like instead of a mainframe computer with single monolithic architecture in one room, full server, you have come onto a microservices base. And that's what we human beings are actually. Man kahin aur hai, tan kahin aur hai, or dhan kahin aur hai. Yeah, and people are actually looking for various opportunities to meet their means and find alternate opportunities to earn revenue. That aside, our core is to take the high end of technology to the bottom of the pyramid, the masses, and we are privileged to be serving about 50 million individuals today through 1 million plus touch points. And I have my friend here from Spice, and they equally do a good hustle with us in the field. Fantastic work, Rajnish. The idea is that the banks need to reach the last mile, the e-commerce companies need to reach the last mile, and there are fixed employment people doing limited work in limited time to earn maximum revenue. Gig is good for us in a way because if my Kirana shopkeeper is doing gig for Unilever, for ITC and for Colgate-Palmolive, he is actually a gig example. All the lenders have reached them, please sell my loan, gold loan, car loan, two-wheeler. All insurers are buying them, and so are we banking correspondents. What is more beautiful and important is that the human intelligence, the social intelligence that the retailer commands of the local ecosystem. Sharma ji's son is free. He can be given an assignment. Gupta ji's daughter is ready to learn more. If that social intelligence is gathered, aggregated, we are working with Nandan Nilekani on Honest, online network for education, skill and talent. Basically to see that if that local intelligence can be harnessed for a gig work or a full-time work or a full-time training and then job deployment, or yet a meritorious student getting a scholarship. So I would briefly sum up, we are actually a railroads into Bharat with a gateway here, not a payment gateway, but a Bharat gateway, where we are telling everyone, Chalo Bharat. And we are actually componentizing everything, sachetizing, and at a pin code level, at a shop level, we are able to propel that service. So it's actually gigifying everything. Like I said, we serve 50 million individuals, and my belief is most of them are from the salary class below 30,000, 35,000, and many of them are gig workers. They have uncertainty of revenue. We see the challenges that we were talking about briefly. We see the challenges, we'll come to that later also again, but they don't have KYC, they don't have consistency of income, and hence there is a need for a formalization and a platform creation on top of that for the industry as a whole. We'll talk about it.
No, that we'll certainly come back to you on that. And before coming back to you, Leena, I'll actually go back to Badal to get his thoughts on the challenges, especially in terms of engaging with these gig workers, onboarding them on the platform to service them, especially given that, you know, a lot of these people might be good digitally now because of, you know, their engagement with mobile, but might be financially not that literate as well, or at times, right? So how do you bridge that gap? What has been the experience and learning around it? Before I switch back to that broader question, but coming to Leena.
Yeah, sure. See, I mean, at one level, credit is a pull product, right? Everybody needs liquidity, and if you're offering it, they will figure it out. So the learning happens on its own. I mean, that's the broad, experience we've had. Having said that, of course, you know, I mean, credit has to be used responsibly. So one is, like I said, we start. EWA is a very good foundation or a gateway for anybody to access finance, right? So we have EWA, we have personal loans, right? And then we also are now with vendors doing things like, you know, bike financing, mobile phone financing, so on and so forth, right? We just started something, again, pilot mode, but on housing, home improvements, loans towards home improvements. So there is a cadence there. Onboarding has to be simple. I mean, the journey has to be, when somebody needs a loan, they need it quickly, right? So you want to make it easier. So it's a balance between ensuring a frictionless user journey and also remaining compliant, because compliance has also come into huge focus for good reasons, because they need to understand the terms and conditions of the loan before they sign up, and obviously RBI has very strict guidelines around it. We tried at some point, there was a hypothesis that vernacular will help, right? But we actually realized that vernacular for a loan kind of interface, which could be very different. Like we also do tax returns. For tax returns, it's a completely different story. But for loans, because it's such a pull-driven product and it's so intuitive, a visual interface is just fine. So English, we gave people the option to localize, but nobody did it. The one point I will make is that partnerships again matter, right? Because the user is, and that's one of the reasons, there are others as well, why we chose a B2B2C route as opposed to a direct-to-customer route like Tala or many others do, right? And the reason for that is that, workers have a primary relationship of trust with their employers, right? And when it comes to matters of money, trust is paramount. And so if we embedded our product into the employer workflow to again, the user journey, the disruption is minimal, but also trust is a big part of that. So we again, coming back to what I said earlier, the nature of the depth of that partnership really matters, because the partner, the employer platform, the digital gig platform, whoever we're partnering with, they have to promote, and they have to be an active partner in the journey and in adoption.
No, thank you so much for that. Yeah, sure, please.
Sorry. Just to build on what Badal said around, the conversion of providing access to financial services and then usage of those financial services through platforms. I think we all know that gig workers on platforms are digitally savvy, but that doesn't automatically translate to usage of financial services, even when they are aware of and familiar with. So I think there's a role, kind of a hand-holding, a reassurance in a phygital way that some of the partners maybe play, the platform partners, in given that they have a trusted, established relationship with the gig workers. We've seen this across some of our other partners as well, where the platform workers will conduct information sessions in person, in addition to kind of the information that's flowing to them through the apps, that's easily consumable. But again, people that they trust being available to answer questions or provide clarifications, I think gives them a certain sense of confidence in, you know, making that shift to usage. So, yeah.
No, and on that note, possibly, and picking up from your first, on the first round of questions that we had, given that, you know, the CGAP's own broad outlook of looking at resilience and security as an end goal, as an outcome agenda, and, you know, this entire balance between how the gig economy workers who are living from paycheck to paycheck, you know, are short on savings or possibly social protection for that matter, you know, credit products like EWA does solve a lot of problem with their existing needs and gaps, right? But then in the first part, you know, were just mentioning about the broadly around the savings and the insurance bit into it. How do you see that financial resilience aspect really coming into play here? Because if the ultimate goal is not just access to a short-term loan, and if it will be about building a financial resilience security at the end of the tunnel, right? What is that journey that, you know, has to still be worked on? You know, what are we missing in this puzzle, which is yet to be addressed, or, you know, we are yet to figure out a way to those elements that are scalable possibly, because while EWA can be a good pull product, right? Insurance on its own is not a pull product, right? Saving doesn't come automatically. So how do we really make that scalable and workable in a substantial way in the market?
I think financial services, firstly, for gig workers is still a pretty nascent space, and scale, I think we still have some way to go before we can get scale. But, you know, I think it's financial services, obviously not for the sake of financial services. It's a means to an end, improving livelihoods, building resilience, all of that. So to your point, as important as credit is, when we think about resilience, I think we really need to think beyond credit to products such as savings and insurance. And, you know, I think for a lot of the blue-collar gig workers, it's really about subsistence. So even kind of being able to earn a livelihood is something that is very real, right? So even when we think about short-term, small-ticket credit, in many instances, that small loan is what enables them to buy fuel for the day so that they can drive their Uber and earn a livelihood, right? So that it's not resilience in the traditional sense that we think of it, I think, financial or longer-term financial resilience, but I think it's part of the story. And, you know, through our pilots with insurance as well as savings, we've seen that even small ticket savings can enable someone to drive their boda and, you know, earn a livelihoods for that day. Maybe something bigger enables them to pay off a loan that they've taken to purchase that vehicle that they drive to earn their livelihoods. And of course, in the face of a shock or a calamity, whether it's health related or something else, it gives them the option to kind of come out of it without going into further debt or whatnots. So I think the resilience piece looks different, and it can be really addressed with some of these smaller kind of financial packages. I think there's also a need for the products themselves, for the providers to reimagine the products. When we think about insurance, you know, we need to put ourselves in the place of those blue-collar gig workers. Often what is required is insurance to protect against loss of income rather than health insurance or accidental death insurance. Because, you know, your primary earner is unwell, maybe there are other ways to pay for those healthcare related costs, but at the end of the day, for a family or a household that relies on their earnings for kind of day-to-day subsistence, that protection against income loss is what's really going to make the difference for them. So, yeah, I think it's requires kind of creativity and imagination when thinking about products themselves as well. And I think the other thing is around delivery of products. Can we, as providers, think of again, put ourselves in the position of those workers, ensure that products are delivered in a timely manner, in a way that makes sense for them. If they have to wait 5 days or even longer for a payout, it might not be as useful. So ensure that these products really meet them where their needs are. I'll pause there.
Fair.
Sorry. But, so I agree that the holy grail is for people to have usage of diversified financial services, and it has to be a balanced portfolio. There are some very interesting findings that we recently uncovered. So we were participated in the first of its kind study on EWA. So EWA, like I said, is a new product, and the International Labour Organization and Gates had commissioned this study, where we gave about 500 odd users were surveyed by 60 Decibel, which is a very reputed organization, and they did a sentiment analysis and asked these users what the impact of using EWA has been. And there are two findings that I want to highlight. One is that EWA, by and large, was considered a unique, essential, and preferred source of capital for these workers who have limited liquidity options. So 70%, for 70%, it was the only source of lending. For 23%, they also relied on informal sources, and only 4% had access to formal means of lending in those formats, right? Second is that they reported improvements in quality of life that spanned financial well-being, resilience, in their own words. This is perceived. Stress reduction and greater agency of decision making, right? So again, 50% claimed better financial independence, 50% claimed increased savings, maybe because of not having to take on onerous debt. I don't know. Those mechanics have to be evaluated. 2/3 said that they were able to reduce household debt. 85% said they had lower stress. So what I'm saying is that they're also, here you have a situation where lending might even, if you have more sustainable means and ways of accessing credit, then that actually helps the household financial portfolio as a whole as well.
No, absolutely fair point, and yeah, you're right. Credit can be a good thing for unlocking a lot of resilience issues, at emergencies, especially at the household level. And then, I'll go to the last question to Anand, and to Leena's point on, the platform players also needs to be creative in, how they engage on participating in this is an equally important point, because, we have seen in India, social protection of gig workers has been, the policy draft has been there for a long time, not been implemented because of the lack of participation. We have seen how state governments in different places have, come forward to, especially launch insurance schemes to cover gig workers in particular, because, they see that to be a big job creator of sorts, at least in their own ways, right? So, but I'll give the last question and the floor to you, Anand, in terms of, how do you see envisioning all of this, in next future to come? Okay, you were talking about, we heard about the data silos, we heard about the challenges that exist in the space, but how would you envision all of this really shaping up, if you have to do a crystal gaze?
No crystal gaze stuff. I'll tell you the yatharth kya hai. The reality is that to bring certainty, the financial resilience that we are talking about, we need to bring consistency and certainty in the job itself. Look at a factory environment. You put up a plant of 1 crore, and your whole focus is to ensure that you get so much assignment so that that machine is viable. And then you have spillover, additional job, assignments coming your way. Then you would do a job work, pass on to someone else, and to another factory then, and then yet another factory. There is a certainty assured to make that machine viable. Now, look at the gig ecosystem that is flourishing. And I'm glad to see the way people are coming out of their houses rather than watching videos. They are willing to do deliveries as low as that, or cab, for example, or the whole entire ecosystem around the home care that is spinning off the maids, etc., or the beauticians who are doing gig assignments rather than a fixed job at one place. What is important is, as an industry, one should look at providing more opportunities to them to become viable sooner in individual capacities. And how can you achieve this is by pooling, like you did for Ola, Uber, you are pooling the riders and passing on to the cabbies sooner so that they are more profitable, they are more on the road and they're earning more, and so that they are more viable and they're enjoying more. Yeah. Likewise, for gig workers, if the industry as a whole starts concentrating orders to make more people viable sooner by earning more through more assignments. Now, what does this take care of is a consistency of income. If financial resilience comes out of just loan or just insurance, I actually believe that it comes from work. So, KarmaLife, if we can give more karma to these people so that they can become more viable, is one first part I would say. Second, I believe that it is our responsibility to ensure insurance for all. Actually, we taxpayers pay money, and the government should first put this out. I was telling to someone in the morning at DFS that you make me sell 20 rupee insurance, I spend 40 rupees on that, and at the end of it, government is giving insurance free to lot many people. So why don't we cut actually this whole unwarranted effort out and let us focus on something more productive, and we rather will pay for the insurance. And half the ecosystem, the gig or the others, are financially uncertain because of a medical emergency. Let that be taken care by the state. I would say that is out. Second, if you are talking about loan as a resilience support provider, I would say give him loan first and then let him earn. Like in any gaming, you show him a lot of reward points and say unlock it. Let him earn backward. There is a loan available, and I like what you said, Badal, that you give more loan if he's doing more assignments at same company. That will effectively help him do, sorry?
There's an incentive.
Incentive actually to concentrate his focus on one company and become a full-time permanent employee and take care of resilience and get a staff loan and get a group insurance. So the idea of granularizing job components is actually not too very good in the far, because everyone is unviable. If 10 guys were doing 10 jobs, if 100 guys are vying for that 10%, you're out. So think of how do we componentize and bring more job opportunities. Now, September 2013, Economist, I remember I was in the flight and I almost felt like jumping off the flight. That report, what it said was that with the AI, ML coming in and automations coming in, there were 750 job types which were up for automation. And the author compares human race with the population of horses when Ford Motor had come in 1865 or whenever. The horse population was at this level. And suddenly comes Ford Motor, and the horses were to be butchered out. They were not relevant anymore. And he says human population is at that junction. And it said 5% of the intelligent population will earn 90% of the revenue, and the 5% outside will do deliveries. And rest will be sitting in this conference room probably. No, I was scared actually. What will the 90% population do then? And then I met our friend Sharon Butte at IFMR, and she said, Anand, don't worry, there are new job types being created. Video watcher, who will tell you by ball cricket mein how to play, where to bet, and so on. So new assignments are coming up. People are learning, liking to teach music, and a lot more. So my take is that to bring resilience of any sort, you need to bring certainty first, and concentrate and educate people. I'm not doing the population discussion right now.
No, fair enough. Sorry, you want to pick up a point.
I was going to say that there is, I guess everybody can hear me, but certainty is one part, but then you could also argue that flexibility is the other, the trade-off, right? And it depends on, I mean, we are also, I mean, a lot of people benefit from the flexibility of being able to work when they're not. In fact, women in particular, right?
Absolutely.
You're balancing home responsibilities with work.
Absolutely.
And gig provides from that standpoint, more of a.
That's additional. That's additional. Absolutely.
And the people can be very providing on their own. We see in cabbies, they will have both Ola and Uber at the same time, right? Switching from one to the other. That's the point to the income certainty that they create for themselves.
Yeah, and it started with software engineers driving Uber in US.
True.
Yeah, software engineers doing
True,
part-time.
true,
That's where
true,
it started.
very true. Now I know we are running out of time already. We have already missed our time limit. But no, thank you so much. Yeah, sorry.
I'm sorry. I have to raise two.
Go ahead, please.
Two major questions, and maybe they're food for thought. But I think, again, coming in as a practitioner, as a fintech, there are two big conundrums. आपने जो challenges की बात करी, challenges for us have been mainly ecosystem level, right? Because when you're doing something new, you have to have the whole ecosystem come together. One is that, we all know RBI, those of you who are familiar, they've been pretty, they've come down hard on consumer unfriendly practices in digital lending, which is for good reason. And there is a general onslaught on unsecured retail credit. Now, for gig workers in particular, we've been talking about small ticket, short cycle loans. Right? There's a question around obviously these loans have a cost structure. It gets multiplied because they may be monthly loans or 3-month loans, and when you annualize them, it looks like it's the pricing is higher than usual. But like I said, the actual workers themselves see value in it because for them the other option is much more expensive, right? So there is some disconnect here, which just from a regulatory standpoint needs to be sorted. The other is the question of whether these workers are disguised wage employees or are they entrepreneurs. If they're entrepreneurs, which we believe they are, because they have income volatility, expense volatility, they make work investments, phone, gaadi, vagara, right? They do not have social security. So if they are entrepreneurs, then these should be MSME loans, and which is a whole different
Conversation.
ballgame. So there are these two big conundrums, I think, around at least finance for the gig worker industry, which has not been solved and needs to be, I think, thought through.
No, very, very well put in. And I think a few takeaways. I think one, gig economy is not going away. It's only going to increase as we speak more, right? Especially given the labor force challenges that we have across, especially women as well. We see them now entering into this space in a very big way, and companies working towards it. So one, that is not going to go away. It's going to become bigger and bigger in terms of pie. Financial services needs to be innovated more and more to keep on addressing these gaps. And I think this regulatory question of the policy direction around these, I think will also evolve with time, and we have to leave it to more of these conversations and dialogue with the policy makers and the right stakeholders in the room to put in front of them the perspectives and the issues that the industry is facing to really serve the market well. But no, thank you so much, all of you, for bringing your perspectives on the to everyone, all of us. And it was great learning from what each of you are doing. Thank you so much.